Harlan Accola is back on. Last time he was on, he was talking about reverse mortgages. We're going to dabble into that and some other stories quickly on today. So, Harlan, first of all, thanks so much for coming back on and talking with us again. It's always a fun time when you're here.
Honor to be here, Rob. Thank you.
Can you talk about what you do at Fairway and what Fairway is in general?
Yeah, so Fairway is the biggest company that you've never heard of. I was fortunate to join them, even though I've been in the mortgage business for a long time, 6 years ago. The Fairway has went from being nothing back in 1996, three people got together, to having over 10,000 employees today. We have 600 offices scattered out over 50 states. We'll end up doing about 80 billion in mortgages this year. We are in the top 5 mortgage lenders in the country. We're number 2 in purchases behind Wells Fargo. And a lot of people have never heard of Fairway. We've got a few TV commercials now, but the main thing that we do is help people in the local communities in areas like Marshfield, Wisconsin, and Prescott, Arizona, and someplace in West Texas and Lubbock, and that's really the situation that is amazing about Fairway and a lot of fun. Is we see people, the people across the country. It doesn't matter if they're in Boston, Phoenix, is San Francisco, or if they're in the small town America. We serve them all over, and it's a lot of fun. We do about 15,000 mortgages per month, and so we touch a lot of people across the country and change a ton of lives. We also have a very strong charitable arm. We run 2 nonprofits, American Warrior Initiative, where we give homes to veterans, service dogs to veterans across the country, and also Fairway Cares, which helps kind of like a Make-A-Wish type thing where we help people with terminal illnesses and their families and so on. So we've got we always say mortgages are what we do, but it's not who we are.
All right, so you emailed me earlier on today about a story about a millennial involved in the housing market in general. Could you elaborate on that? Because I think a lot of the listeners, regardless of what age group they're in, would really learn a lot from this story.
Yeah, it's weird. It's actually the son of a client that I've had for years, and he recently moved to Nashville, and he's in the music industry. And he said, "Hey, I'm sick of renting. I don't know anybody that knows anything about housing. They just know about music, and I need to talk to somebody who understands business and tells me whether or not I should buy a house or not buy a house. I don't have any clue. I don't know what's going on. And some of my friends say I should buy a house. Some of my friends says just rent. It's stupid to buy a house. What should I do? And all the houses are going for over asking price here in Nashville, and maybe I should buy somewhere else outside of town, and just confused about the whole deal." And so I had a conversation with him, and it's really pretty simple. Mm-hmm. It's just like my son. Well, I have 4 sons, and the last one just bought a house. He got married last year, and he just bought a house in March of this year in the Minneapolis area, Eden Prairie to be exact. And when he was driving away from the closing, he called me up and said, "Hey, Dad, you can come over and help me move now." And I hate moving. I was looking for excuses, but I got roped into it, so I had to help him move. But anyway, at least he didn't have me carry any heavy stuff. But what's interesting is, of course, I've indoctrinated him for a number of years. But Josh said to me the same thing that I told this millennial who had just turned 30. Josh said, "Hey, Dad, I just started on my reverse mortgage." And he's 31 years old. You can't get a reverse mortgage till you're 62. So why did he say something like that? Because people miss the mark as to what the purpose of buying a house is. It is beyond, and this is what I told this millennial, it is beyond clear, the statistics are solid, that homeowners have the best retirement, and the earlier they bought a home, the better off they were in retirement. Mm-hmm. Just like the sooner you start saving in your 401ks or your IRAs or whatever, the better off you are in retirement. So when you think about it, why do we buy houses? The only reason we buy houses is because they go up in value. Would anybody buy a house if they knew for sure that houses were going to go down in value? Probably not. Yeah. So the whole idea is that you need to look at this as a prudent investment. It's not just a place to have a roof over your head. You can pay rent to get a roof over your head. You got to take a look further and say, well, why do I want to buy a house? Well, because I want to live in this area for at least the next 4 or 5 years. Because if you buy a house now and you're planning on moving in a year, that's a really dumb idea because there could be a pullback in the housing values. So as I told him, if you're going to be in a place for a long period of time, as long as you're not going dramatically above the rental, if it costs $2,000 to rent and now you're paying $2,500 for a house payment, that's okay because you got to pay somewhere to live anyway. So unless you're living with your parents or your friends and the rent is free, if you're paying something anyhow, you might as well put it into your pocket because you're paying somebody's mortgage no matter how you look at it. Either you're paying your own or you're paying somebody else's mortgage. So the idea is not to overpay for a house and start paying $3,500 for buying a house as compared to $2,000 a month for rent. All that means is that it's too expensive of a market and you should probably look at a different market. But is it a good idea to save for retirement? Yes, in the light of a reverse mortgage, like my 31-year-old son said, I'm putting money away at 31 so I can get it back when I'm 62. But if you don't look at it that way, if you don't look at the house as an investment and something that you can pull money out of when you get older, it doesn't make as much sense. You need to look at the house as a place to live and also as an investment. And way too many millennials, way too many older people like me don't understand those two factors that go into buying houses.
My question is just to go back into 2008. Are you worried with the eviction moratorium coming up and homelessness problem? We see, the country, I feel like is really on a tipping point right now. I don't want to get too much into politics, but is on a tipping point right now as far as the inflation level, the eviction moratorium, the job crisis right now, where there are a lot of people that are still not working. So, how is this kind of going to evolve? I'm not trying to say that you're Miss Cleo and going to, give us the whole lowdown for the next 20 years, but how do you feel this is going to evolve as far as housing? And you also stated a good point. The baby boomers are retiring. A lot of them are dying too. A lot of those houses are going to go up for sale. The birth rate is extremely low right now in this country. So there's going to be more houses then there are people to buy those houses. And how is that going to affect the market? So there's a lot of things I feel like to think about. And sorry if I rambled. There's just so much, I guess.
No, you hit the main points. But, some of these economists have these, fancy wave things and all these complex graphs and everything else. And I'm just not that smart to be able to articulate all of the different things that they talk about. But I think it comes down I think we can simplify things because if you take a look back for the last 200 years through the Depression and everything else, everything in the economy is ran by two major issues, and that's demographics. We saw the baby boom after World War II. And all of a sudden, why did Gerber baby food skyrocket? How come Schwinn bicycles went nuts? How come the Beatles, you take a look at any area, the Beatles went nuts because all of the people in our age group loved them. And Decca Records, by the way, refused them and turned them down because they said guitar music was on the way out. Demographics trumps almost everything because we are consumers. We have to eat, we have to buy food and clothes and cars and everything else. So demographics is going to be very solid, and the biggest transfer of wealth, there's $9.2 trillion just in housing wealth for those of us that are over 60 years old. So that 9.2 trillion, we talk in terms of trillion and that seems like, whoa, but you start comparing that to other areas and how much money is going to be transferred from 401ks and IRAs to the next generation. So, however, we also have to take a look at supply and demand is the other thing. So you look at demographics and you look at supply and demand. Supply and demand for housing is still going to be strong going out for the next 15 to 20 years. But when the baby boomers, depending upon what happens to life expectancy, I told my kids, when I'm close to dying in my 80s or 90s, you better be selling your houses because there's going to be a big drop off. There has to be, if you take a look back at how many kids are being born, because this year, for example, is the first time that we're not going to be replacing ourselves. That's a demographic situation that you can't reverse. Now, if that changes and all of a sudden everybody starts having 4.5 kids per family, that's going to be different, but we don't see that coming at all. No. People are delaying having kids or they're not having kids at all. And that is a huge issue. However, is there a bunch of things that are going on with the country that is scary as heck? Absolutely. For somebody like me, taking a look at just what's going on. And we also know that 50% of the people are not paying taxes. A lot of people don't realize that only 50% of people pay taxes. Well, what happens if all the people that don't pay taxes start voting in the people that are asking for more free money? When I was in high school in the 70s, I wrote an article for a local newspaper about the trap of accepting money from the government. You start accepting too much money and pretty soon you get dependent upon it. Are we at that point? Never in history have we had this where 50% of the people are supporting the other 50%. Are those things concerns? Yes. But one of the basic things, people are always going to take care of food and shelter. People are not going to stop going to the grocery shop. They might stop buying stuff at Tiffany's, but they're not going to stop going to the grocery store. And they're not going to stop looking for a place to live. I mean, yes, there's some homeless people. Of course, we know all about the homeless epidemic, but are we looking, in answer to your original question, are we looking at the same thing as 2008? And the answer is no. I'm not saying there isn't going to be a drop off in values, but there's still 20, 30, 40 people going after entry level homes. Are the $1 million houses and the $2 million houses, are we seeing reductions in those? Absolutely. And however, the starter houses, are those still popular? Yeah, because people still need a place to live. And all of the bad paper, there was a house of cards that was built around 2008. That was a bunch of fake money because there was, just watch The Big Short and you can see all the, the stuff that went behind that. It was smoke and mirrors. I mean, they'd sell the same mortgage 18 times. That same thing is not happening now. Now it's just all the millennials are coming in. The baby boomers like me are buying second homes or buying move-up houses. And so the demand in housing is going to be strong. That doesn't mean that there's not going to be drops in the market. That will happen. But how big of a drop? I told my son when he bought his house, I said, don't worry about it. If your house goes down by 10%, big deal. You still have, you were paying rent anyway. So just keep paying that as long as you don't plan on moving. But if you're planning on moving in the next 2 to 3 years, I would tell anybody don't buy a house because there's probably going to be a correction.
I personally think, and this is what I want to ask you, in these big states where there's a lot of taxes, do you think there's going to be a real huge correction there because all these people are moving out because they don't want to pay the taxes in these places? Plus, in places like New York, where COVID was extremely bad at the beginning, people moved out because of that, not even because of the taxes.
Well, you hit the nail on the head there. People vote with their feet. And they are heading out of those locations. Take a look at the cost of a U-Haul from, somebody just mentioned this, the cost of a U-Haul from San Francisco to Boise, and then from Boise to San Francisco on a one-way rental. It's like 1/10 the cost because everybody is taking the U-Haul out. So if you want to take a look at housing markets to decide where you want to live, if you can live anywhere, take a look at what it costs for me. A one-way U-Haul is what somebody gave me the advice on. So yes, I don't think there's any question. We've already seen prices in Manhattan go down. I mean, how many people are going to want to work there? I'd be a little bit afraid of buying commercial office space there. Because people are moving out because they can work anywhere and because it's very high expensive taxes along with some other things. So, I mean, for example, I'm out here in South Dakota and I said, I talked to the people at the hotel and I said, how did things go last year? It must have been a rough year. And they said, no, everybody was coming here vacationing because nobody could go anywhere else. So everybody was coming to look at Mount Rushmore and doing their, coming in with their RVs and their cars and renting out the hotel. And the bottom line is this, you have to look at where business is doing well, and forget about being a Democrat Republican. Just look at the facts of how well businesses did in Florida, South Dakota, and Texas as compared to New York and Massachusetts and California. And it's pretty obvious what happened during COVID, and that when that affects businesses, and there's some businesses that went out that are never going to come back, that affects everything.
I want to go into this. I have a family friend that lives near me in Florida. He's an older guy. He's actually 82, real in really good shape though, mentally and physically. and he works all over on houses and stuff. He's retired. He paid off his house. He told me something about this, and I want you to clarify just if I'm getting anything wrong on this. He said that right now with the market now, if he, since he paid off his house, if he got a reverse mortgage, he would really be making out right now. Is that true? Is that false? What is your opinion on that?
Well, it's very true. In the 18 years that I've been doing reverse mortgage, I've been in the mortgage business for more than 2 decades, almost 25 years. And there's never been a time where interest rates have been lower and home values have been higher. So it's the perfect time for people like myself to pull money back out and lock in those high values. So if in the future his house is worth 800,000 and in the future it's going to go down to 700,000, we lock the value in at 800,000 and give him money monthly or in a line of credit according to the high values today. So it's kind of like, from the investment world, it's like buying a put on home equity. You're guaranteeing a future value of your home, and to not take advantage of that and wait until you're broke or wait until you need it doesn't make sense. Emotionally, people want to keep their house free and clear. However, from a strictly logical standpoint, it is foolish to do that. So the wisest thing he could do, even if he doesn't need the money today, is at least set up a line of credit that he has money available. My dad had a stroke at 86. He was able to pull money out to take care of home care because he had set up the line of credit on the reverse mortgage way back years before that happened, when I had done that for him originally. And he had $300,000 on a little farmhouse in Wisconsin that he could use to pull the money out. If he wouldn't have done that before, because people say, well, I'll just wait until I need it. I can go to the bank and get a line of credit at any time. I've got news for your audience. Wells Fargo, the largest bank in the country, stopped doing lines of credit for any of their customers a month and a half ago. They're done. They're not doing any more lines of credit, none. And people that had lines of credit have been frozen and put into repayment. And that's the largest bank in the country in one of the hottest real estate markets, stopped lines of credit for everybody. Bank of America is doing it regionally in some areas. I suspect that a lot are going to follow. Reverse mortgages are the only lines of credit that are guaranteed for the rest of your life. Get that in place so you have access to the money in your house. And that's what your neighbor at 82 is talking about, that even if he doesn't need it, it's available to him. And he can grab that money if he needs it or wants it, or even wants to gift it. Let's say that he wants to gift it to his kids or his church or charity or whatever now. Have access to that money. I always ask people, if you've got to pay it off, when somebody comes to me and elbows me and says, I don't need you mortgage guys anymore, I got my house paid off, it's free and clear. And they stand taller and they kind of, feel really good about it. I always say the same thing. I'm really sorry to hear that. Not because I'm being sarcastic, but I'm sorry to hear that you've taken 500 grand and put it into an illiquid asset that's not earning you anything other than the money you saved on your mortgage. Yeah. You don't have that money available. Your 82-year-old neighbor has that money available when he does a reverse mortgage, because it's there that he can get it anytime he wants inside of 5 days, checks into his account, no matter what's going on with the stock market, the value of his house, the economy, the foolish things they do in Washington. He's got that money available to him no matter what. If he dies in a year like now, there's still value left, even though he's never put any money into it. So if he pulls out a 200,000 and there's still 350 of value there at the end, the remaining balance goes to his kids. And so
that's what I was going to ask you. If he dies, if his kid's names are on the house, what do they divvy that between each other?
Yeah, well, the name shouldn't be on the house. The way you should set it up is that they inherit it on death, because otherwise there's a problem with step up and basis. People make a mistake all the time about putting their kids' names on their houses. And they should not do that, because it opens up all kinds of tax problems. But when he dies, let's say that, then the kids inherit it. So let's say that it's worth 350,000 the day that he dies, and he's used 200 grand. He's taken out 200 grand. Well, the kids get the remaining 150, not us. The lender does not get that. We just get our 200 grand back plus the interest that was accrued over the time period that he used it. So whatever amount of money is left goes to his children, not to us. So the bottom line is that there's so many people that believe that the bank takes the house. If I had $1 for every time somebody said that, I'd have millions, because everybody thinks the bank takes the house. We don't want houses. We're lenders. We are not landlords. We don't want to own houses. So what we do is we simply lend you money and then we collect it back after you pass away. And whatever's left goes to your children, not to us, because we never owned your house. The deed transfers to your children just like it would if there was no payment or no mortgage on it at all, or if there was a forward mortgage on it. All of that 100% is going to come back to the children, whatever's left. So people say, well, I don't want to do that because I might die the next day and my kids are going to get nothing. That's not true. Whatever money you've taken out, if you took out 50 grand, we only get the 50 grand plus the interest that was accrued. So it's a very wise thing that the earlier you put it on, the better off you are, because you may not need the money today, but it's a great idea. That people always say, when's the best time to borrow money? The best time to borrow money is when you don't need it and when the interest rates are cheap. Well, that means right now. So what does everybody wait for? It's weird the way they always think it's for somebody else, but in reality, it's for them. That's the big surprise is people say, oh yeah, this is a great time to borrow money. Well, then why don't you do it? It's really odd. But I'm going to pay off my house. Really? Why are you going to pay off your house when money is so cheap? It's never been cheaper. I bought my first house. This really dates me, Rob, but that was 1981, 16.5% interest.
Right.
My sons have all bought their houses between 2.75 and 3.25.
Right.
Whole different world.
The only way you like that 16%, if you have some good money in the bank, then you'll be kicking some butt.
My dad retired in 1981, the same time I bought my first house, and he was getting 15% on his CDs.
God bless him. Yeah.
He could make more money, Rob, with 200 grand back in 1981 than I can in $1 million in 2021.
Wow.
And yet people are trying to make the same decisions like their parents did back in the 80s. It's a different world and you have to do things differently. Some people say, my dad never got a reverse mortgage and he did just fine. Well, yeah, he was getting CDs at 8 to 15%. Whole different world. So don't do things the way they were done back then. You don't use rotary dial telephones anymore.
What are the hottest markets you're seeing as far as reverse mortgages? Are we just still talking about that Texas, Florida market? Because people are moving out of California. Are we even looking into Arizona? I know that used to be a pretty hot market for retirees too.
Yeah, defensively, anybody that's living in California, New York, Massachusetts, New Jersey, areas that have high taxation and the values are still high, those people need to do a reverse mortgage yesterday because they got to lock in their values. That's my very strong opinion on that. Now, as far as the hottest markets to move to, what's really shocking is people are moving to rural America, and it shouldn't be shocking because you can work from anywhere. So, you cannot overlook places like Prescott, Arizona, Boise, right, Idaho, and small towns in Texas. Amarillo, I was just there last week. Amarillo is a hot market. Amarillo, I mean, just flat, nothing but sand and wind and, some cows out there. And it's amazing that a lot of people that didn't think their values were good in the rural areas, that's where there's still some bargains. Where I come from, Marshfield, Wisconsin, you can still buy a 3-bedroom, 2-bath home for under $200,000. Those are some things that people need to look at, some of those areas, because they can live cheaper than what they would otherwise. Now, a lot of people don't want to retire in Wisconsin. It gets 30 below chill factors there. But the fact is even if you move to some place in rural Georgia or the Carolinas or Tennessee, where the weather is nicer, whether you're older or younger, not just reverse mortgages, but some of those areas are going to have more room to run than the areas that are already probably topping out at some of those hot areas in California and New York that have been so high for so long.
Where can people find more about you and learn more about you in general?
Well, they can go to Fairway Reverse at fairwaymc.com. Also a great way to get a hold of me is my email, Harlan A, HARLANA at fairwaymc.com. And I always direct people in the direction of wherever they want to go if they want to talk to one of our local folks or whatever. And they can also get a copy of my book. It's on Amazon. I only have one book out there on Amazon, and that's The Cinderella of the Baby Boomer Retirement. But if they go to one of our offices, they'll get a copy for free. We're not really interested in selling books. We sell mortgages. So you can pay $18 for it online, or you can get it for free if you go to one of our offices. So weigh that out for the cost benefit.
All right. Harlan Accola, thanks so much for your time. It's always a pleasure.
I really enjoy you, Rob. You're doing great work. Keep doing it. We appreciate you.